Good afternoon, everyone. It's Australia Day here in Washington, DC. It's -1 degrees, and I've just gotten back from some Aussie rules footy training with the DC Eagles. Now, I'm about halfway through the second long stint overseas on my Nuffield, and so far I've been able to visit heaps of farms in India, Qatar, France, the US, and Canada. And I've been focusing on that relationship between risk and business performance. And also looking at those financial instruments which farmers can use to help us manage that risk. Here in the US, we've got the very large and complex crop insurance program, which I found really fascinating as it's probably been more about rural society and the farming families culture than it is about the economics of the agricultural industry. Now, that doesn't mean I don't think that the program isn't economically successful. In fact, I found that 60% government subsidy to the premium doesn't necessarily underpin the program like I thought that it did. In fact, every farmer I've asked what would happen, if the subsidy was removed, they said they'd still participate, but there'd still be a lot of complaining. When I was in Canada, I found out there were actually a couple of private unsubsidised crop insurance products which were competing really well against the government subsidised products. And it seems like the farmers that are actually using these products were probably some of the more astute business people in the industry. I've spoken to dozens of crop farmers here in the US and Canada, and one of the biggest differences seems to be that detachment of land assets from their farm operating business. Over here, they just don't seem to be as codependent as they are in Australia. They've got a lot of share farming and leases, and the successful succession planning seems like they're able to transition that farming operation without necessarily transferring the property titles. Although land prices are a lot higher here, it might be easier for younger or newer farmers to actually get into farming or expand. But I might have to stress that easier doesn't necessarily mean cheaper. So with or without crop insurance, I think decoupling land assets from operating businesses is something we should really look into. From the technical side of things, looking at insurance, those that know me will know that we went from a revenue type multi-peril crop insurance product in our own business to using weather derivatives to ensure our rainfall for a few reasons. And so upon reflection, I still think there are advantages to weather derivatives, but I think we need the buy-in from our ag lenders in order to get that industry-wide and community benefits that I've been able to witness in rural parts of North America. I've come across a heap of different insurance products, and if I had to pick a couple to go into that I find the most interesting and probably the most applicable, that'd be these two. Number one is profit margin insurance. So rather than insuring your gross revenue like the products do which are available in Australia, we could insure a portion of our historical net profit margin, dollars per hectare, or more likely that break-even point. Now, this would probably be more beneficial for growers, say in frost-prone areas where there might be still a risk of low production, even when you've got those higher inputs in a higher yield potential year. And I came across this product in Canada now, where it's offered unsubsidised. It's available there, it does well because the farmers already have a really good data set on their costs and also their profit margins. Now, something I think we're a bit behind in. Now, the second product I've come across I think would be really applicable is called price loss coverage, or PLC as it's referred to here, and that's effectively helps with their grain marketing. So US farmers are pretty similar to us in that I think we're pretty conservative when forward selling or hedging our grain, and that's probably because we're trying to protect against those, that low yielding year where we might be out of the money on our swaps and we don't want to be writing out checks. The PLC product is sort of like a put option, however its volume, as I said, is actually aligned with our final production. So this gives us that upside market potential, but limits that downside risk, and even in years where the production is down. Now, there's some good things I've learned, but also some mistakes that I really hope we won't repeat if we choose to implement anything similar here in Australia. And one of those things is probably the subsidies. Now, they no longer benefit the North American farmer. They're already built into the land prices. So I think if we were to use subsidies to try and get a product off the ground, I think if we left the subsidies there, they'd be integrated into the land prices within about 12 years. Now, been able to ask a couple of really well-respected ag economists here in the US what they'd do if they were to start again or with a blank canvas. And one of the suggestions I had was to phase out those subsidies incrementally once those farmer participation targets were met. And perhaps another way the government could participate to a program would be to act as the final stop-loss underwriter in conjunction with the private reinsurers. Now, this seems really important even over here still with any new program which is launched, and it seems to encourage private reinsurers to commit to longer-term contracts with insurance programs. I found that as the insurance companies that offer these products develop their funds, a lot of it's actually reinvested into bonds. So the contributions by government are certainly not a one-way street. I really like this type of contribution as it effectively replaces the drought response fund, which is reactive, with a methodical and proactive policy. Anyway, so that's where I'm at so far. I've still got a bunch of reinsurers, economists and farmers to visit in New York, the UK and Germany. One negative thing I've found is that I've been given the gifts of my gifts out, which are Vegemite tubes, and they've gone down a bit like a lead balloon over here after some taste tests. I'm hoping that the Brits and the Germans appreciate its interesting taste a little bit more. I'd like to thank the GRDC and the levy-paying growers for supporting me with this opportunity. I look forward to getting back home and sharing everything I haven't forgotten already. Thanks to Nuffield WA for considering and supporting me as a Nuffield candidate. And finally, all the best for Johanna. I hope you have a blast over the next 18 months. So thanks, everyone. I'll see you when I'm back in a few weeks. Cheers.